Hello everyone, welcome to chapter 28. This chapter, along with the next two chapters, will be the most important ones in CPI. The topic of these chapters are exactly what you need to solve the final piece of the puzzle in your trading journey. In these chapters, I'll be sharing my whole personal approach to my analysis, starting from the higher time frame down to the lower time frame execution. And step by step, I'll walk you through the exact concepts I use, how I apply those concepts systematically, and exactly how you can do the same to make your high time frame analysis methodical, objective, and more effective. Now, of course, this isn't just a magic fix, right? You'll also need intuition, chart time, and experience to master these concepts fully and to be able to integrate them properly. But right here, this is the stepping stone to level up your trading and transform how you conduct your analysis. So let's move on to the next slide and let me explain. Now, right here in this slide, let's first of all talk about the higher time frame analysis. Now, the higher time frame analysis is the basically the foundation of a strong building, right? It's exactly what holds everything else together. And if you don't get this right, your entire trading plan and your entire system can collapse, right? Higher time frame analysis gives us the bigger picture. It includes determining the higher time frame directional buys, selecting the correct key levels and liquidity zones, and all of these things dictate where the market is likely heading. So let's break it down in a step-by-step manner. Now, the main focus of this chapter will be first of all to determine the impact of the higher time frame perspective in analysis on any asset, and how does that analysis perpetuate itself on the lower time frame, and how you're going to use it to assist you with your lower time frame execution. And after this chapter, you'll be capable of identifying the directional buys for the monthly time frame. You will be able to determine and identify the higher time frame monthly drawn liquidity both for the short term and the long term. And apart from that, you'll know exactly how to pinpoint and select the correct candle ranges in CRT, and along with the key levels based on the current dealing range in order flow. And all of this will inherently lead you to conducting a detailed and comprehensive systematic analysis on a monthly basis, right? This will be the main point in concentration of this chapter. So let's move on to the next slide. Right here in this slide, you can see the exact step-by-step approach regarding how you're going to conduct your higher time frame analysis. You can see all the higher time frame concepts that you'll be using, which will assist you in this methodical and systematic process. First of all, we'll be starting off our analysis with analyzing the monthly time frame with seasonal tendencies. After that, we're going to do our quarterly shift analysis, and we're going to look at the markets in terms of market profiles to determine exactly which profile are we dealing with currently. And once we do that, after that, we're going to do the intermarket SMT analysis between correlated pairs, and basically we're going to look for non-symmetry in price for any potential SMT divergences, which could help us anticipate expansions, reversals, or any manipulation in price, which could then further either confirm or refute our high time frame directional buys, and then based on that we can make our analysis even more effective and efficient. And once we do all of this stuff, then we're going to determine the order flow, the higher time frame order flow, by basically using the principles and guidelines that I taught you in the order flow chapter. And if price is in a range bounded condition, we'll use the range dynamic protocols to see how we can dissect price action currently, so that we can see it out with a more objective perspective. And after we've done all of that and we've determined the current directional buys in the next round liquidity, we'll be dissecting the current dealing range into premium and discount zones, right? And then within those zones, we'll be identifying the correct and the proportional key levels and candle ranges, to basically use them to position ourselves in the direction of the high time frame down liquidity. And then we'll dissect the current in the next monthly candle with the open high low close concept. And if you don't know how to do that, basically watch the open high low close chapter. And basically all of that will lead us to determining directional buys and the drawn liquidity on the monthly time frame, right? And both of these aspects, both of these important aspects will be clearly and completely defined for us in a methodical, objective, and in a systematic and mechanical manner without any emotions involved, and all of this done with proper logic. So, that being said, let's move on to the next slide and let's break down each step in a detailed and comprehensive manner. Right here, let's break this down step by step so it's super clear. First of all, start with the calendar month that we are in or that we are about to begin. The idea here is to focus your analysis on the specific time of the year that we are dealing with right now. What you are doing is that you are narrowing it down to the practical starting point because we know that seasonal tendencies can often vary depending upon the time of the year, right? Now, if you don't know what I'm talking about, basically refer to the seasonal tendency chapter. If you haven't gone through it, then I suggest you watch that chapter first to know exactly how you're going to be doing that sort of analysis and exactly how you're going to do that. Now, here's where you need to personalize it. You're going to look for seasonal tendencies that are specific to your asset class or market. Now, this is key because we know that not all markets move the same way. Some markets may have bullish seasonal trends, other might have bearish ones, right? And some might not even have a clear pattern at all, right? And what you're going to do is you're going to focus on the ones that are relevant to exactly what you are trading and how you want to trade it. And once you've done that, you're going to align your trading ideas with these seasonal trends or seasonal patterns. Now, the goal here is to use that data to your advantage. For example, if your asset historically shows to have bullish seasonal trends during a certain month of the year or a certain time of the year, then at that particular time, you might want to prioritize long setups that aligns with that seasonal tendencies. It's basically about stacking probabilities in your favor. But also keep this in mind that not every market will have a clear seasonal tendency or a seasonal pattern all the time, and that's completely okay. It's important for you to recognize exactly when seasonal tendencies don't apply so you don't force them into your analysis. And this will ensure that you are systematic, methodical, and objective all the time, and you are aligning the data with your analysis instead of random guessing. Now let's move on. Here in this slide, let's discuss the quarterly shift analysis. First of all, you're going to review the previous month's price action to identify exactly when the last quarterly shift occurred. The idea here is to look back and pinpoint when the market transitioned into a new market profile or a new phase or direction. This could be a significant turning point, such as a change in the trend, order flow, or a notable change in market profile or whatever, right? Now, to know exactly what you're going to be doing, basically watch the quarterly shift chapter and you'll know exactly what I'm talking about. So, basically, you're going to determine the quarterly shift that we are currently dealing with, and you're going to estimate exactly how long it might continue. Your job is to figure out where we are in the current cycle. Are we still in the same phase or is another shift approaching? And then you're going to think about the duration and figure out exactly how much longer could this phase reasonably last and when could the next phase might start. You're going to ask yourself, Are we entering an expansion market profile or any other one? Are we in a bullish quarterly shift or a bearish one? In which direction is the current or the next quarterly shift going to be? These are some of the questions that you would have to figure out yourself through the quarterly shift analysis. After that, your job is to look for supporting ideas that aligns with your analysis or your premise. This means that you're going to use the other aspect of your analysis and see whether they support this idea or not, and whether they confirm your understanding of the current or the next quarterly shift. And finally, you're going to integrate this with your seasonal tendency analysis to either support or negate your analysis. And this is exactly where you bring in what you know about seasonal patterns to either validate or question your conclusion. So basically, in this step, you're going to combine the seasonal tendency analysis with your quarterly shift analysis in a systematic, in a logical manner. So let's move on to the next slide and let's break down another step of this whole process. Right here in this step, what you're going to do is you're going to determine the current market profile. You're going to ask yourself, are we in an expansion profile where price is trending strongly in one direction, or are we in a consolidation profile or a ranging profile where price is moving sideways in building up or generating liquidity for the next move? This step is important because in this step you are identifying the profile of the market, which is the foundation of your analysis. And once you have done that, you're going to refine that even further into advanced profiles, right? Once you know the general profiles, you're going to break it down even more. You're going to ask yourself, are we in a consolidation, expansion, reversal, retracement, or a manipulation profile? And all of this will help you understand the market structure and will help you anticipate its next move with an even more greater accuracy and precision. After that, your objective is to look for supporting ideas to validate your premise and analysis. Your objective is to ask yourself critical and logical questions. Does this price action align with my analysis? Are there any key levels, any external factors that confirms or either contradict what I'm seeing, right? You're going to look for evidence to back up your conclusions, to either validate or negate it. And then finally, combine all of these insights with your seasonal tendency and your quarterly shift analysis. And this is where everything comes together. By integrating market profiles with your broader seasonal and quarterly perspectives, you create a more comprehensive and a more well rounded view of the market. And this approach ensures that your high time frame analysis is both structured and deeply informed. Now let's move on to the next slide. Here in this slide, let's discuss order flow and range dynamics. Just like I said before, this is a step-by-step approach, and you're going to be doing this exactly how I'm showing you right here. You're going to start with seasonal tendencies, right? Next step is that you're going to integrate that with your quarterly shift analysis, and then in a step-by-step approach, continue this whole process exactly like I am doing in this chapter. So, first of all, measure the order flow or the advanced market structure of the market. This means that you're going to analyze the flow of the price and you're going to identify whether the market is trending, consolidating, or it's in a transition. Order flow will help you understand the market's current directional bias. You're going to assess and check whether price is rejecting lows and breaking highs, or it's rejecting highs and breaking lows. And then after that, you're going to look at the short term, intermediate term, and long term highs and lows to see how price is interacting with them. Are these levels acting as support, resistance, or liquidity zones, right? And this whole multi-time perspective will help you build a more comprehensive analysis about the order flow of price action. And if price is in a consolidation profile or it's ranging, then you're going to apply the range dynamic principles to figure out where price might head next. Is the range about to break? And if it's about to break, then in which direction, right? And you're going to use the guidelines and protocols of range dynamics to establish a directional bias in case of a consolidation or a ranging market condition. And once you've done all of this, you would have determined the overall order flow. And then you're going to tie everything together, right? The price action, market structure, and range dynamics to understand the broader trend and exactly where the next likely move could occur. Now let's move on to the next slide. Here in this slide, let's break down intermarket SMT analysis. First, perform the intermarket analysis between closely correlated assets. This means that you're going to be comparing the behavior of assets that are linked with each other, right? The goal here is to spot discrepancies or non-symmetry in their order flow, right? Basically meaning moments in price action where one asset behaves differently than expected compared to the other. And these discrepancy will reveal the potential market maker manipulation to you, which then you could use to exploit potential swings and expansions in price action. Your job is to analyze the symmetry between correlated assets or pairs and look for alignment or divergence in their movements. Symmetry can help you pinpoint key spots where expansions or reversals are likely to occur. For example, if one asset is making a higher high while the correlated isn't, then that's a clue that something unusual might be happening or the market makers are actively manipulating the markets. And then you could use that information accordingly to position yourself in the direction uh, that the market most likely wants to move in, which is basically in the direction of the high time frame down liquidity, right? And you're going to then combine this whole analysis with the rest of the analysis in this methodical approach and reach a conclusion. Moving on. Now, let's move over to the next part of analysis where we get into the specifics of price action. So, after determining the high time frame directional bias, drawn liquidity and order flow, what you're going to do is you're going to break down the selected price range or the dealing range that you are currently dealing with into premium and discount zones, right? Now, you're going to think of this range as a zone of opportunity. The premium zone represents area where price might be overextended, and the discount zone represent area where price might be undervalued, right? And this segmentation or this dissection will help you focus on where the best opportunity lies. In case of a bullish order flow or bullish market, you would want to look for trade ideas or trade opportunities in the discount zone, which means key levels in discount and candle ranges inside the discount zone of the current dealing range that you are dealing with. And similarly, in case of a bearish market, you would look for your trade ideas and trade opportunities inside the premium zones, right? Your job is to identify all the key levels within the premium and discount zones, and then based on the direction of the high time frame directional bias and drawn liquidity, you're going to position yourself accordingly based on the protocols and guidelines that I've given you, right? And finally, you're going to use all of this analysis that you've done to build potential trade ideas and to look for potential trade opportunities. Combine everything that you've identified, the directional bias, liquidity zones, the premium discount key levels, the candle ranges, and CRT, right? You're going to combine all of those and use that framework to create well structured and logical trade setups. This is exactly how you're going to go about your high time frame analysis. These are all the steps that you would go through at the start of each month to perform your monthly analysis. Now let's move on and let's summarize everything that we've covered in this chapter. The first step is that you would refer to the possibility of a specific seasonal tendency at a particular time of the year. This will help you understand how historical patterns during certain times of the year could influence the current market environment. Next up, you're going to anticipate a quarterly shift, right? You would do that by analyzing past price action, right? And you would be predicting potential transitions or continuation in the current quarter. After that, determine the current market profile. Identify whether the market is in consolidation, expansion, reversal, or a retracement. And this will set up the foundation for your analysis. Next, you're going to measure the order flow. You will observe how price is interacting with highs and lows, and you're going to use that information to measure the directional bias. Then to validate your analysis, you would confirm it with correlated assets by checking symmetry and discrepancies between related markets, right? And with that, you will be able to reinforce your perspective. And from there, you would select a portion of price to trade within. That's what we call the dealing range. And this range will give you a clear focus area for identifying clear trading opportunities. And within that range, you would identify the key levels and the CRT, right, that you would use to position yourself. And finally, this entire process will lead you to a proper and a clearly defined directional bias and drawn liquidity on the higher time frame. And this analysis will then be refined further down to the weekly time frame for a more precise and accurate view. This whole step by step approach and process is designed to ensure that your analysis is thorough, logical, and actionable. This is exactly how you would conduct your higher time frame monthly analysis on a monthly basis. You would conduct this analysis at the start of either each week or each month. Now let's move on and let's discuss an example. So, right here in this slide, you can see this price action chart. This is the monthly time frame on euro dollar. So we have all of this price action, and let's see how we're going to go about our analysis and conduct it in a proper manner to determine the next drawn liquidity for price and the next directional bias that we can trade towards. This is a naked chart, so we're going to start off our analysis right from the first step, which is the seasonal tendency analysis. From the euro seasonal tendency chart, we can see that mid-year on euro dollar we have a bullish seasonal tendency, which means that price usually has bullish price action mid-year. Now we can use that information to build a potential trade idea right here on this chart. So what we can see is we are currently in the middle of the year, right? And seasonally, from the euro seasonal tendency chart or data, we've concluded, or what we can see there is euro seasonally forms bullish price action. So now, if we've done the first step, we've determined the bullish seasonal tendency, and we can see, and we've basically concluded that euro forms bullish price action, right? That's the first step done. Now let's move over to the next step, which is the quarterly shift analysis. So based on this price action, what we can see is the last two quarters, or the last 2.5 quarters, we had bearish price action in which price consistently formed bearish down close candles, and the order flow is extremely bullish for the last 2 quarters, or 2.5 quarters to be precise. Now, based on this information, we can conclude that if the last 2 quarters or the last quarter was bearish, then it's highly likely for price to transition into a bullish quarter the next month. right? We know that because of quarterly shift analysis, right? That's the whole premise and idea of quarterly shifts. If the last quarter was bearish, then it's highly likely for price to transition into a new quarter, which could then be a bullish quarter. And also based on market profiles, we can see that we were in an expansion profile the last 2 quarters. And if we're going to have another transition, then it's highly likely that we can either have a consolidation or a reversal market profile in the next quarter, right? So both seasonal tendency analysis and our quarterly shift analysis are pointing toward the upside or the bullish side, because seasonal tendencies have told us that euro forms bullish price action mid-A, and then the quarterly shift analysis also is telling us that we can potentially have a bullish quarter once this monthly candle ends. And then based on order flow, we can see that prices breaking above highs and rejecting below lows, which means the order flow is bullish. So our drawn liquidity is going to be higher, right? And right here you can see that we've rejected below these equal lows. So what that means is that now price is taken out counter liquidity, and now we can start our new expansion higher, which brings us to our new step, which is the market profiles. Currently we are in a retracement profile, and with this retracement profile we've rejected below these equal lows and we've taken out liquidity. Now the next market profile and the next likely profile that we can have is an expansion profile higher after this retracement profile ends. And the order flow is also bullish, which also backs up this idea. So we not only have market profile telling us that price can have an expansion profile higher, we not only have the order flow telling us that price can now have an expansion leg or a bullish leg higher, but also we have the seasonal tendencies analysis and the quarterly shift analysis telling us the same thing, which is that price is most likely going to move higher after this monthly candle closes. So with all of this whole analysis and this thorough analysis, we've determined the next possible likely move in a systematic and logical process and approach. Now we know that the next step is now to select the current dealing range, and within that dealing range we're going to select our key levels and potential candle ranges. And right here you can see is that this low that we've taken out is the key level within our current dealing range. And what you can also see is that we've taken out this low with this particular candle right here. And after we took out this low and then this candle closed, the next candle purged that candle and then it closed inside of that candle. So now potentially we can use this candle as a candle range or a CRT to position ourselves in the direction of the drawn liquidity, which is higher. Right? This is how we selected a proper key level in a candle range to position ourselves. Now we can either negate or validate this idea even more by adding another confidence by doing our intermarket SMT analysis, but that is optional for you, right? This whole process that we've done so far is more than enough for us to be confident in our analysis and trust our analysis and trade it in the bullish direction. Now let's move over to the next slide and let's see what happened next. And right here you can see is that price exactly did what we expected it to do. Price had an expansion profile higher, it had a bullish swing higher, and the CRT that we selected worked out perfectly. And after price closed above the CRT, it then used it as an order block to test it to form support there, and then it expanded even more from there, right? This is how you would identify your directional bias in a clearly defined manner.